A day after U.S. markets erased losses after last month's disappointing jobs report, Federal Reserve Chairman Ben Bernanke assured lawmakers that the foundations for long-term economic growth remain solid.
U.S. banks have greatly improved their financial strength in recent years, as I noted earlier. Nevertheless, the situation in Europe poses significant risks to the U.S. financial system and economy and must be monitored closely.
The UN has lowered its forecast for international growth due to the failure of European leaders to stem a regional crisis that threatens to derail the fragile global recovery. Analysts say world markets are likely to remain on edge until there's greater certainty, citing double-dip recessions in parts of Europe, a banking crisis in Spain, and a possible Greek exit from the Eurozone. Market strategist Stephen Wood.
The politicians in Europe are doing a very effective job at scaring the world's investors and making a mess of this in Europe. So they're going to have to make some very difficult decisions very, very soon to not only deal with their problems, but to kind of calm down the investment world.
Investors looking to the world's largest economy for a new round of monetary stimulus didn't get it. But Fed Chief Bernanke said the U.S. Central Bank is prepared to act.
As always, the Federal Reserve remains prepared to take action as needed to protect the U.S. financial system and economy in the event that financial stresses escalate.
Investors welcome Bernanke's comments, even as his European counterpart Mario Draghi reiterated concerns that Europe's current trajectory was unsustainable.
Is subject to increased downside risks relating in particular to a further increase in the tensions in several euro area financial markets and their potential spillover to the euro area real economy.
While no new action is expected in the U.S. until the Fed's next meeting June 19th, Bernanke urged Congress to act decisively on a long-range plan to avoid what he calls a fiscal cliff, a term he's used in the past to describe automatic tax increases and spending cuts that would likely come if Washington fails to reach its deficit-cutting goals by the end of this year. Arcega, VOA News, Washington.